DSP Business Cycle Fund. Will investing in this NFO help you in your wealth creation journey in the long run or not? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial decisions and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this will be a good fit for our investment portfolio or not, let us first understand some basic details about this NFO. As an NFO, it opens on 27th November 2024 and it's open until 11th December 2024. And some of its key features are it belongs to the category of equity thematic scheme business cycles and it has an open-ended fund type, and the benchmark index for this fund is Nifty 500 TRI, and the minimum amount you need to start investing in this fund is just 100 rupees, and the fund manager for this fund is Saranjit Singh, and the exit load for this fund is 0.5% for redemption within 10 months. And riskometer for this fund is very high. So these are some of the key features of this fund. Now let's take a look at the investment strategy of this fund. The scheme seeks to provide long-term capital appreciation by investing in equity and equity-related securities with a focus on riding business cycles through dynamic allocations across various sectors, themes, stocks at different stages of business cycle. So this is the investment strategy of this NFO. Now let's take a look at the investment philosophy and investment objective of this NFO. It aims to invest at different stages of business cycle in the economy, and it can also provide long-term capital appreciation by focusing on riding business cycle through dynamic allocation between various sectors and stocks at different stages of business cycle in the economy. Now, as we have taken a brief look at how this NFO works and what are its basic details, now let's move on to analyzing whether this will be a good fit for investment portfolio or not by analyzing the pros and cons of investing in this NFO. So first, let's take a look at the pros of investing in this NFO. The fund is diversified among the top performing companies that undergoes different stages of business cycle in the economy between various sectors and stocks. And if you are an investor seeking for allocation to the different stages of business cycle in the economy between various sectors and stocks, then this might be a good fit for you. And also, if the new trends and emerging sectors performs and delivers well in the market, then it can definitely boost overall returns in your investment portfolio as well. So as an NFO, it applies high risk and high return concepts. So the higher the risk you take, returns you can potentially get from this NFO. And it is suitable for aggressive investors who are bullish on the different stages of business cycle in the economy between various sectors and stocks. So these are some of the advantages you can get from investing in DSP Business Cycle Fund. Now let's move on to understand the cons of investing in this fund, because the cons are equally important to know as well as the pros, because cons reveals the potential risk you might be undertaking by investing in this NFO. So now let's take a look at the cons. As I have already said, this NFO applies high risk and high return concept, which means if you are going to take high risk, especially in an equity fund, then it is riskier for short-term investors. And also, this fund is not suitable for your core portfolio. Just because this business cycle is performing highly trendy right now or performing good in the market, it doesn't mean all new trends and emerging sectors translate into stock market returns. So if you choose to still add it to your core portfolio, there is a high chances you may overexpose your portfolio to negative triggers, because it's not flexible and dynamic when compared to diversified funds, because it is only choose to invest around the business cycle theme. So it can also add more volatility to your portfolio because it has high concentration risk. So if the new trend and emerging sectors underperforms in the market, it can definitely impact the returns in your overall portfolio. So to invest in a thematic fund like this, timing and circle of competence should be on your side, which is definitely hard to time it because the market is unpredictable. So these are some of the drawbacks of investing in a thematic fund like this. So you need to consider all these factors before considering investing in this fund. So what is the final takeaway? Should we invest in the DSP business cycle fund or not? As we can see from our analysis, this is not a beginner friendly fund to start your investment journey with. So if you are a first time investor, even if you are a conservative investor who is not willing to take any risk, you should avoid invest in this fund because this is a highly riskier fund. But if you still want to invest in a business cycle thematic fund like this, there are other existing business cycle thematic funds with track record of at least 7 to 10 years. So instead of investing in a NFO like this without any track record right now, you can invest in other thematic funds with a track record of 7 to 10 years, where you can analyze how it has performed in the highs and lows over the course of 7 to 10 years, over the course of long term period, to take a calculated risk. But if you invest in here, you might be taking a blind risk, which might be very riskier for your core investment portfolio. So it will not be suitable to add to your core investment portfolio. If you still want to invest in it just to see how it will perform over term, then you can definitely invest it through your satellite portfolio with some surplus money. And also this will not be suitable for you if you do not know when to enter and exit from a business cycle fund. So for a thematic fund like this, you need to know when the thematic fund will be performing well in the market, and you need to get before it crashes. So you need to time the market properly to gain the potential returns. So you need to have sufficient knowledge of the market. You need to have some experience before choosing to enter in a thematic fund like this. So if you do not have that kind of knowledge, then this might not be suitable for you. But if you are still having doubts whether this will be a good fit for your investment portfolio or not, you can definitely consult with a certified financial planner for the suitability of this fund with your investment portfolio. They will check the investment objective, risk tolerance, and what is the overall ratio between your investment portfolio and the investment portfolio of this fund, and what kind of allocation or how much allocation you need to give to this fund option to achieve your financial goals better. So they will be able to look at all these angles and give you their personalized financial plans for you to achieve your financial goals in a more better way. So definitely involving a professional financial planner will help you in your investment journey and planning your financial journey more easier for you. So you can definitely consider investing through professional like this also. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goals, don't hesitate to book a free appointment with our financial experts. The link to the free booking is given in the description below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description. If you like this video, hit like and share it with your social circle. If you haven't subscribed our YouTube channel so far, please do subscribe. Thanks for watching.